Hey, what's up, ladies and gentlemen? This is your boys and feelers, and welcome back to another video. Okay, guys, it's about time we learned a couple of things about the game. Yep, it's time to learn. It is time to learn. Okay, one of you guys in the comment section made a request that we check out the lifestyle of a guy called Trader Nick FX. Yep, he goes by the name Trader Nick, and we're about to check out his lifestyle. Guys, you can also do the same. By doing the same, I mean like you can also go down into the comment section and give us the name of the person that you might want us to react to. Then we will definitely deliver as per the request. Simple as that. Okay guys, before you could dive into the video, please bear in mind that our motion is now modified to like and subscribe before watching, which simply means like the video and subscribe to our channel before you could continue with the video. Now let's dive in.
So yesterday we got the surprise, or maybe not surprise to some, but the long-awaited rate cuts and perhaps a surprise of 50 basis points being reduced from the Fed funds target rate. And the market had a huge reaction in every corner, whether you're talking about currencies or commodities or indices, stocks, etc. Everything really got moving quite a bit. And there's some, controversy here because there's, if you listened to this podcast a few weeks ago, you probably would have heard me saying that a 50 basis point cut could cause a bit of concern. But I think Jerome Powell did a very good job at delivering 50 basis points in a way that was arguably like a 50 basis point cut that was with a bit of a hawkish spin on it, which might have explained the reason that the initial reaction was mostly very risk on and very optimistic, followed by a big slide in prices. So if you look at the NASDAQ or the S&P 500, you'll see there was a huge run up on the lower time frame charts, and then they completely reversed as Jerome Powell came up and took the stand.
And we actually got 2.5, which the revised forecast was 2.5, so we came in line. But to your point there that you just made about expectations for next week, and that really is what this is all about. We've got about a week to go here before the Fed makes their first decision as to whether or not they're going to cut rates by 25 basis points or 0.25%, or 50 basis points, 0.5%. And today's data was sort of the last chance for those who were thinking a potential 50 basis point cut would be likely. It is still, of course, possible that happens just by some bizarre turn of events, but very likely now we are expecting 25 basis points from the Fed next week because, again, CPI is coming in 2.5%. It is cooling in line with expectations. If it were cooling a lot faster than expectations, 50 basis points probably would be more potentially appropriate or likely. All right, initial reaction here is blips lower, dollar index is higher, CPI, dollar index higher, S&P flat, Nas flat, euro dollar down, pound dollar down, gold mixed. Let's have a look at the numbers. Okay, actually 2.5. So 2.5 core CPI, however, was higher than expected. So we did get the 2.5% reading. S&P 500 a little bit lower on that. US 30, so Dow Jones also lower. You get the NASDAQ a little bit lower. Dollar index is up on this data point. We had the consumer price. So core came in line 3.2% year over year. The consumer price index year over year came in 2.5%. So inflation cooler than anticipated. Fundamentals might tell you which direction that the market could go, but it doesn't tell you when. If you really liked Meta stock, it cratered in 2022. I think it was like 70+%, or you might have liked that stock. Fundamentally, it was still a very profitable company, but the timing would have been awful if you had bought too early. That's where fundamentals are good for direction, but not always great timing. All know when you go to the grocery store right now, things are way more costly than they were before. And that's not just something that traders pay attention to, that's absolutely everyone on planet Earth. Prices are going up. There's a possibility that could lead to consumers really feeling the pinch at some point, could lead to business profits being deteriorated a little bit. And if that happens, maybe you see a change in the stock market.
A tweet this week specifically saying if price action is all that you needed, why is it that data coming out price spikes after the data comes out? When a CPI print comes in lighter than anticipated or hotter than anticipated, price moves after, not before. Fundamentals clearly are why the market is moving forwards, and then the price can kind of paint the story that is being told from the fundamentals. Almost made me quit trading was doing all this backtesting and finding out that it's really hard to make any sort of large returns with a purely mechanical system. Again, that was really discouraging for me because I was like, this is not going to be, everybody I'd heard from about trading was like talking about how much money you can make from it and how it can be incredibly lucrative, and it can, but what they don't tell you is you need capital, you need patience, you need slow and steady, and you need to be able to, most importantly, handle drawdowns. So through all this backtesting, I was really finding that drawdowns are like the number one thing to look for when you're testing a system. It's like, how bad is it going to get? That was like my back testing kind of obsession, and it probably saved me a lot of money. I say this all the time, like this totally saved me a ton of money in trading because I realized I can't find profitable systems easily. This stuff cannot be easy.
What's up, baby?
What's good, my boy?
How you?
Staying out the way.
Okay, that boy clean.
To some people's surprise, myself included, the market actually jumped up on this number initially, which may have been confusing. But then when you look at the unemployment rate, I think there was probably some fears baked in there that, unemployment rate's been on the rise. Previously, it came out at 4.3%. So maybe there was a little bit of a relief, pop in the stock market simply because, and same thing with the dollar. So the dollar in the stock market popped on the opening, opening run on this data point. And maybe it's just because unemployment rate actually came down. We saw 4.2%. So maybe some of that fear was offset by the lower than expected unemployment rate. But the good news kind of stops there, Johnny, because when we take a look at what you mentioned, the 142 compared to 164, that tells half the story, which is a not great start. But it's the revisions. The revisions really caught my eye, and probably a lot of investors' eyes as well, because previously, if listeners remember, we saw the jobs data point come out last month cause a big slide in markets globally. We saw the Japanese yen get very strong. We saw global stock markets sell off of the fear that, okay, we might have a hard landing here on our hands. Jobs data is really sliding. Well, not only did the number today miss for the reported number for August, but they actually revised that 114,000 jobs missed from last month. They revised it lower. Anybody who is listening, who is trying to get into trading, or you're new to it, stop everything, spend time backtesting. You will never regret spending more time on a backtesting, kind of simulator. And there's plenty of companies out there that offer that sort of thing. I would highly recommend you look them up, find it for yourself, and it's a game changer, I think, for anyone. Might hurt some feelings here, but I made a video recently about why trading is really, really hard. Like, why is it actually that difficult to make money? And in my opinion, it's not psychology, it's not discipline, it's not like, oh, I'm just making silly mistakes. Yes, those things will stop you from being a profitable trader, but that's not the hardest part, in my opinion, to becoming profitable. The hardest part is actually finding an edge. If you ask people for track records, people don't do 10% per month consistently for a long period of time. Nobody does it on a regulated broker. For people who are aspiring to be traders, you can say whatever you want, but to show is very different than to say. And so I think that when it comes to the trading space, ask for track records, because if people are selling things, especially knowledge or education, that's kind of a prerequisite, in my opinion. This morning we had the JOLTS job openings report, and some of these economic data points, over time, they shift in their meaningfulness to the markets. And as we've discussed in the podcast recently, labor statistics have really taken center stage here in the last few weeks since the Fed's transition, more focusing towards the labor market, according to Fed Chair Powell. So this number this morning was not at all what the market was looking for. We had a forecast of the JOLTS job openings. Of course, the job availability in the United States is an important impact or an important indicator of job statistics. Well, we forecasted for 8.09 million job openings. What we got this morning was 7.67 million. So a big miss there. But not only that, we saw the revisions to the previous reported number go down from 8.18 million down to 7.91 million. So the moral of the story here is that we saw a pretty substantial slide in job openings in the United States.
And weak jobs data ahead of an NFP report and ahead of a Fed meeting has the potential to very much spook the market.
In terms of your track record, so 4 years, if I'm not mistaken, I think it's what, over 200,000 in profits?
On this account, yep. I started it in 2020. I think it was like an initial $50,000 into it. But the 200,000 is just strictly P&L. In fact, I could check it. I'll show it to you. We can check it together. So
We've got it.
there it is. I think the overall is, yeah, it's like 250 plus. When it comes to prop firms, my take on them over time has been taken as more negative by the industry. It's very natural to say you come to trading and you're like, okay, I have like $500 to $1,000 and I'm willing to try this. And that's like very normal for most first world Western countries. Then if you tell those same people that if you trade slow and steady, they're going to make like 1% to 2% per month, that's nothing. People disagree with me. People fight with me on that all the time. Not my most popular take, but my take on it is like, we've watched in the last few weeks, it seems, inflation statistics really take a back seat to some of the other ones. I mean, even a few months ago, inflation readings, PCE, CPI, I mean, it was like everybody, it was so silent in the room as the number dropped. Everybody was so trying to anticipate what's going to happen, what is this going to do to the Fed expectations. And, while inflation is still very important, we heard from Jerome Powell himself, just the lean has shifted more towards focusing on the labor data. We're no longer at that 9% inflation year over year that we saw, which really spooked the markets. We've really come down a long ways. And so I think you've set it up nicely there with basically inflation now is just let's watch this number, and as long as it's not a threatening number, okay, then it's a non-event. It's almost like inflation are just like checkpoints that we have to, like hurdles that we have to get over, but they're not going to, make ginormous strides in the market, because again, what is now moving the needle big time is more on the my stock brokerage.
And he's out. Guys, sometimes you just have to keep quiet and let the gurus do the talking. Hence, I was quiet throughout the whole video. This is Boys and Fillers signing out as well. Please be sure to hit that like, share, and subscribe button for more content.